What is going on YouTube? Brendan from Market Makers, your home for Wyckoff and advanced Fibonacci TA. Guys, the equities markets were green, but Bitcoin didn't do a whole lot today. So I thought I'd do something different. I'm going to show you quickly how I set up my 8-hour chart. And then I'll also show you the importance of the 4-hour chart here when Bitcoin is in a dissension. Okay. I'm going to show you some key things to track on the 4-hour, and I'll show you how to set up the 8-hour. Real quick, the join button that's normally below the video. We had so many people trying to join at the same time. This is a new service offered by YouTube. Be able to join our Discord through the integration of YouTube, that the button stopped working for some people. We had to open a trouble ticket. It's being reviewed. They said it should be back online in a day or two, so please be patient. Thank you so much for everybody that does want to join and did join. 6,000 people on the Discord. And of course, guys, BITGET, link in the video description, $4,000 in bonuses. Let's talk some TA. So on a large scale here, guys, on the daily time frame, we are accumulating, holding our key support line, that blue Ganfan line, and really it just looks like we're just going sideways, right? Smaller time frames, you'll see more, but I just want to show you this again. Here on the daily, your cloud is still very far away from you. It is still descending. You have to defeat those resistances at the lower time frames first. Now, it is worth noting, of course, you do have the dissension here of your 200 and 233. You are down to about 41.8 and 43,955, so basically 44K. They are moving towards price as they should, okay? So these resistances will get lower, so when you do get a rally, especially on the daily time frame, that will be very key resistances to pay attention to. So let's look at the 8-hour and how I would set up a chart. This is all I need right here. This is how I trade. Just joking. Let me go ahead and turn this off and let's look at this. So what I like to do is I like to carry over on the 8-hour specifically. I'll carry over my daily Fibonacci resistance or support targets, okay? Because the 8-hour, as you can do the math, is 3 candles for 1 candle versus a daily, okay? I like to do a lot of my trading on the 8-hour. You do get to see more with having 3 candles versus 1. And of course, the 4-hour I will also use as well, but I spend a lot of time on the 8-hour. So let's set up our trend-based fib, 8-hour time frame, guys. You can grab a chart and let's go ahead and go to that swing low, that January 24th, okay? January 24th up to that swing high, which is what, March 28th, down to the swing low, and we'll get the same targets we've been talking about on this channel for over a week now. As you can see, you have your 382 at 31,185, your 0.5 at 32,991, your 618 at 34,798. Important to note, your 200 and 233 are both descending. Again, I like to use both of these. Banks, hedge funds, the ones that actually employ technicians, simple moving averages are very common. They don't typically use exponential moving averages, whole moving averages, ALMA moving averages. These are more exotic things for day traders and for traders like me. They're not using that at large institutions, okay? But so use your simple moving averages just to look at what they're looking at as well. But as you can see, these are always key targets in a downtrending market. You always want to know your 200 and 233 are. Remember, this is price has traded above these lines and below these lines, and this is the average, and you're in a descending market. So you can see quite clearly here, when I come onto a clean chart like this, you can see quite clearly here, you have candles and they're floating. You lay out your fibs. You could also look for fibs for support, but I don't want to do that right here. What I like to do trading vis-a-vis Wyckoff, okay? I do a lot of Wyckoff on every chart that I'm in. Now, if I was going to do pure Wyckoff here on Bitcoin, this is a selling climax candle, right? This is denoted by the markdown. Price finds a pocket of demand and you get this wick, you get this shadow, strong demand wick, okay? Smaller body, strong demand wick. The more wick, the better. Shows a lot of demand, but that's your base. Now, how do you find your top? Well, after you have your base, remember, it's like a rubber band. So you're stretching the rubber band as price is falling and then it snaps back, right? So here's your blue candles back to the upside. And then when that trend changes to go back down again, that's your ceiling. Very simple, okay? Very simple concept. And let's go ahead and throw that on there. Now, the problem with volatility in crypto utilizing Wyckoff, okay, is when you have strong sell-offs or strong bullish markets, you'll have this big gap oftentimes in price. Now, sometimes you see this gap filled because it's just very volatile trading range. This is a very defined trading range. So I'll go ahead and modify this and make this more of a Darvis box. Nicholas Darvis, a famous trader. He's written a few books. I I have a video that I made about him in the room, how to utilize his Darvas box method as well. It's basically a volatility box. Okay, you're capturing this range. And now what you've done, which is nothing but a trend-based fib and some trend lines, is you've captured a trading range. Okay, and what we're looking to do here, nothing's changed. Very simple. This is like trading with the legends of old. Okay, what we're looking to do is accumulate and break out. Okay, that's what you're looking to do. And you have your fib target, you have your Wyckoff ceiling at 30,989, your fib at 31,185, and of course you have already been rejected from it, so it's important to break out above it, most likely get some retracement, come back down, and be able to break out. Okay, that's what we're looking to do out of this accumulation range. And you could say, well, how do you know if you're going to go to the downside? Well, this is also where your indicators can come in. This is where it comes into effect of being an individual trader, understanding what the macro market is, understanding what the equities are doing, which they're all green today. You have to understand all these things, okay, to really be an efficient trader. You could just work purely off price action, but I want to know as much data as possible when I trade. And some of this you can use with indicators, right? So we can throw Ichi on here. Looking at our 8-hour, we know that this is getting weaker as price is going sideways, right? So this is thinning out as price is going sideways. And we know we have some more room to move here. So we may be accumulating for a little bit while longer. And other ways you can check your trend. You can also look at our volatility indicators. Whether you're using a Keltner channel, which utilizes ATR, or you're using Bollinger Band, which utilizes standard deviations, you can see different formations of volatility channels, and you can see this is compressing. Okay, when you compress, you're getting ready for a move. This is an expanded channel, just like you would see of Bollinger Bands or a Keltner channel. This is a tight channel. Okay, so we are gearing up for a move. I do believe that move has a bias to the upside for a couple of reasons. One, we are in accumulation, which is the bias after markdown, denoted here by a selling climax candle in demand. Okay, price loves to move in waves, guys. This is how price moves. Moves in all these waves, and we should be able to move up, find some resistance somewhere, and then you move back down. And that's also how you make shapes. You try it again a second time, you make a double top, you break your neckline, and price descends, right? This is just a pattern that's repeated over and over. So as long as we're holding accumulation, this is a very defined range. I mean, you can see how tight this range is. And actually, if you got to measure this, is probably about 10 days, it looks like. Oh, yeah, 10 days. It's 32 bars, 8-hour candles, okay? So this is 10 days. So you have a very tight range here. And again, you can be scalping here, buying at the base of this, selling at the top, or shorting at the top, riding it back down. But we're looking for that move out, that pivot out here on the 8-hour time frame. And let's look at some other indicators here. What else do we have that's useful here? We can use, let's see, we looked at Ichi. Let's look at our VPVR really quickly. VPVR, you can see where your point of control is. Now, granted, this is a small range here of candles, right? Remember, VPVR, you can pull in more candles to get more volume. You can see where your peak volume resistance is up here, about 38.9, and that's candles going all the way back to January 21st, okay? So when you look at this, I mean, this to me looks like we're going to attempt this move up. It just looks like it's going to be a little bit further over to the right when you zoom out like this, okay? So that's something I'm going to track closely. And if you can also throw on smaller moving averages, of course, these are my volume weight at 34 and 55. You can see how price is interacting. I'm not a big moving average trader other than the longer term ones, and that's what I look for resistance in a declining market. Let's go ahead and go to the 4-hour time frame. 4-hour time frame, again, these are my daily fibs, okay? So it's the same targets, but I did the same concept here. You could see where you would actually have your Wyckoff base at down here, right? This selling climax candle. But I tightened it up because we're in a very, very tight trading range. So that's something that I like to do when you're in a defined trading range. Very important. What I wanted to show you guys in this video, very important to look at your 200 and 233 on the 4-hour in a descending market. Let me go ahead and show you why. I already have it on this chart. So let's go back to Bitcoin here. This is after your bull run, right? This is your 4-hour time frame, your 200 and 233. You can see it being used as support, but it flips, okay? The 4-hour time frame is a good in-between time frame. It's not as small as the 1 hour, 30-minute, 15-minute, but you get a lot more candles than the daily. And something you guys need to look at here, because these turn into really nice trades, okay? In a descending market, you fell down, you descended, the moving averages had to move down, but when they do move down, this is why I use both of them as well. You have your 200 and your 233. Let's see which is which. The 200 is white. Okay, the 200 is white. So you have your 200, you got above it, you wicked the 233 here. This is a big short we took in the room. This was back when we first started our room, June of last year. And this was a massive move, guys. And I got it based off this 233. It wasn't magic. We hit it right here and we failed. We came back up and got a failure just above it, and then it declined, and this dump was massive. This was my biggest trade of last year. This was a 30% dump. This was 12,000 points? Yeah, 12,561 points. This was a massive move after you failed at the 233. Remember, in declining markets, these are very strong resistance points, your 200 and 233. And you can see it used over and over again here as well in range, right? So here's your 200. Here's your 200, you hit it, fail, hit it, fail. And then you can see you're below it. And then the next time is when you get that bullish momentum and break back out, okay? And if you pull over your chart, looking at the 4-hour time frame, I made videos on 4-hour time frame back then, just on the 200 and 233. You can see whenever price starts to fail and you do fall below it in the 4-hour time frame, it's very useful to know where you are with a 200 and 233 because they become key resistance points to price rises, okay? And you'll see it over and over again, especially in these descending markets. You can see here when Bitcoin lost its all-time high, your 200 and 233, again, it's very useful to use both of them. You can see where price struggles with it over and over again. These become really nice trades. I mean, look at this. If you would have shorted at one of these failures here, you caught that dissension, right? We shorted back up here near the top, but you would have caught this dissension. There's always multiple opportunities to short in a descending market. And if you pull over to more current time frame here, go over to December, again, when people say, you know, people look for trades every single day, right? But the best trades to take oftentimes are the higher probability trades. Well, they always are the better trades to take, a higher probability. And this is one way you can look at probability in a descending market. Your 200, 233, giving you repeated benefits here. I mean, look at this move. If you just would have stayed in that move that whole time, you were in massive money. I mean, you see this? So it's very important to understand how long-term moving averages work, okay? It's the trend. It's a 36% move, guys. It's a trend. When you're in a descending market, and this is why it's so important as well not to have a bias when you are trading these markets. If you're just drinking Kool-Aid and you're just, hey, DeFi's the world, blockchain's the world, it's going to change everything, everybody's going to be on crypto, the Fed's going to be abolished, it's all going to be crypto-based, you're not going to be open to understanding the marketplace that you were trading in, okay? And when you're in a descending market, these are huge trades if you understand the interaction of TA and resistance and support levels. Wyckoff gives you this, long-term moving averages give you this, and you can just scroll through, and I highly recommend people do this, okay? I recommend people do this because you can look at all the trades that you potentially missed as well. And you see it, you hit it here again, and you captured this whole descent. Okay, that whole descent. So just key things to look at, but that's why I think it's very important, especially in a 4-hour time frame in a descending market. And these are above us, okay? I'm gonna tie it all together for you. These are above us, and this is why it's so key, and this is why I'm focusing where these moving averages are in relation to the chart, because price will always rise to resistance or fall to support, okay? And what you're doing now is accumulation, and this is like loading the cannon for the cannon to be fired and put up, okay? You could fail, something bad could happen, macro news event, catalyst, you could fail, but what you're doing is bullish. This is bullish accumulation off of a markdown, off of a beautiful selling climax candle, and you're accumulating in a very tight range. And I'm looking for the next point of failure for price. And if you can defeat this on the 4-hour time frame again and flip it, then we're looking at the 8-hour time frame. Where are those moving averages? And of course, we're looking at that 40K level then on the weekly, right? So remember, everything's in segments. You're doing this in steps. Doing it in steps, understanding the macro backdrop of where you're trading. This video went a little bit long, but I hope you guys enjoyed it. Hopefully there's more price action to discuss tomorrow. And guys, be on the lookout for that join button. And I will talk to you guys tomorrow. Have a fantastic day, everybody.